I'm not getting anything, so I don't know where it fucked up at or whatever. This thing, I just don't know what it is. So just let's.
All right, sorry about that. Somebody's microphone went unmuted in the Zoom. Anyway, good morning, everybody. Jack Leeson with StartupTrading.com. It is 9:10 in the morning on the 21st, and the title of the video is Traded All the Way into the Extension. So, obviously, got a new president, and the last time he was in office, whole lot of headline movement. One day in, we already got it back. But yeah, as Perry mentioned, tariff headline on the way up, tariff headline on the way down. But really, all it's doing is creating targets and entries for analysis that we know. And one of the entries that we had here last night was this extension that we've been inside of that goes all the way back. It was in that morning trade plan. Hold on one second. So, trying to figure out how to mute. Jeff Martin is the one. All right, Jeff Martin. We hear you. All right, back to this. Tuesday of last week, let me go to a 5-minute chart. There was an extension that we've gone over in the previous videos, but basically that first traditional anchor from 330, we held that in the overnight session, completed targets the next day, and we came into play on that anchor again on the close on Thursday. Beautiful overnight rally, and then just ripped up into those profit targets again. And then last night, for the third time, we came all the way back down, very quickly. Most of it was really in this candle, the 173 points in 5 minutes at about 8 o'clock at night. And, the next candle, 127. The next candle, where is it? 157. So some big boy volatility. And then that 38% retracement trades, 21,427. We rally out of it for a one-time cycle. This traditional here is aggressively front run. What's interesting about when you have these huge reversals like this and extreme volatility, obviously we dip all the way in there. But if you draw from where the higher time frame anchor bid would have been, that often ends up, for whatever reason, those computer programs, that's where they bid it. That's where they bid it. We break above resistance. We set up in another long. We complete that to target. We set up in another long. And that's where we currently are. So it was into an extension, traditional, and that is where we sit as we go into the open. Now, it was a 3-day weekend, and there's been a heck of a lot of volatility. Friday, for being the stock market being closed, was pretty volatile. A lot of movement, and I'm sorry, not Friday, Monday. Monday, a lot of movement. Friday, a lot of movement. But as we go in the day, this is the traditional from the overnight session continuation. If we break this, then I'm just going to remove the extended session. But right now, with this traditional, we have an upside target of 21,776. And the next target above that, guys, is this basically 22,000. And that's from the pullback last night. You're also getting that breakout of this downtrend we've been in here on the daily chart that we kind of started breaking out of last week. But you can see we're really, a close up here would be a very clear breakout of that downtrend on the daily chart. And that means, we're going to be taking out eventually these previous highs of the day. So My bias is long here today. I think if we're lucky, we get a full halfway back long from the overnight low. That would be really, really great. If we're super bid here, we're just going to continue in the series from the overnight session in the NASDAQ here, move up to the 21,766 target, and then take it from there. But very similar thing in the ES here. Back out to the hourly chart. The extension is it's not an intraday extension. It's much clearer and easier to see. It's Tuesdays. I mean, the extension we're trading the NASDAQ definitely takes a trained eye. If you don't know those series exist, you would never understand it. But this one's a little easier. This high of Tuesday to high. We traded that Wednesday. We were watching it. We traded it Thursday. We were watching it. And then we got a more aggressive series into Sunday. Monday, got a new high. Same anchor new high. Come all the way down to that 50% retracement. Beautiful stick. Rip higher here. And the series we're in, very similar as soon as we traded that. And once again, you have the low, but if you draw from where that 50 was, you're getting filled, right? So the computer programs, they do that. When you dip on those super volatile sessions, they draw from where the draw is. They do the math from the draw, not from the low, but from the draw. And then that's why you see you get filled there. We break above highs. There's another pullback. We complete that target. This next pullback dipped, okay, but I'm going to leave it up and use that as our upside target of 60.75, 60.75. So if we were to go into today, like not using the extended session, there's a totally different anchor from Wednesday's high that we saw on Friday, and I believe you can argue we saw it yesterday. That would be the other scenario I'm going to watch. So I'm going to draw Wednesday's high here to Monday's high, futures high, and you can see the reactions we had here yesterday while the stock market was closed 60.64. That would be also a more aggressive draw. So that's what I got between these markets. I'll share these levels with you guys in the room, and then I'm going to jump on the squawk and share my thoughts there once we hit 9:30. Take care.